Welcome to The Business. I'm Alicia Barry. Coming up on the program, victim of its own success, rapid solar uptake causes headaches for the grid. Are batteries a solution?
We've got more solar than demand during the limited generation period in the middle of the day. So if you're able to store your energy, then you can use it at night time yourself.
And a lifeline for oil refineries. The government coughs up $2 billion to keep them open.
This package enables the protection of 550 jobs here at Lytton and hundreds more indirect jobs.
The uptake of solar panels on homes has been so successful, the energy regulator says the excess power they create is causing problems for the grid. Financial incentives for sending electricity to the network are being cut, and regulators are even considering penalties. They're encouraging people to buy batteries, but not even 5% of households with solar panels have them. Amelia Turzon reports.
Australians are obsessed with solar.
Is an absolute phenomenon. We've gone from 0.2% of households in 2007 to 20% now, and that's 2.6 million households.
In Darwin, installations were encouraged by subsidies and very generous payments for power sent to the network.
You were using the grid to store the excess energy that your solar was producing, so there was no physical need to have the batteries in at the time.
But the regulator believes the massive uptake of solar across the country is an issue.
All of that power coming in at the same time in the middle of the day for an electricity network that was set up to get power to your house is causing problems, and we like to refer to it as traffic jams or congestions.
The Northern Territory has now slashed the amount of money that households receive for power, known as the feed-in tariff, and offered subsidies for technology that's being installed under these rooftops.
Okay, battery candid battery port.
The homeowner got solar panels along with a battery, allowing him to store all the electricity he generates.
At the end of the day, that's why I've got the battery now, and hopefully that'll prove to be just as good as having that feed-in tariff.
The challenge at the moment is that we've got more solar than demand during the limited generation period in the middle of the day. So if you're able to store your energy, then you can use it at night time yourself.
5 years after the first Tesla system went into an Australian home, battery sales are growing. 31,000 were installed last year. There are now 110,000 households with batteries, but that's still less than 5% of all homes with solar panels. The data shows that it's mostly new solar systems that are getting batteries. The question is, how do you encourage the millions of people already with solar to invest in storage too? For some families, cost is still a barrier.
I would like it to last a long time for the amount of money that it's going to cost me, because if I weighed that up against whatever electricity cost coming off the grid and it was more expensive, then that's not really worth it for me.
Battery prices haven't fallen so significantly as people might have hoped for, and so therefore we're seeing almost a steady market.
Subsidies seen in the Territory are ramping up nationally and feed-in tariffs continue to fall. The industry says it's now at a tipping point.
What I suspect we'll see is a removal or a reduction of those feed-in tariffs over time, and we're about to see tariff repricing nationally in July. It'll be interesting to see what people do.
The regulator is even considering penalising homes that export power to the grid when the market doesn't want it.
I think it will definitely drive battery uptake, because it's basically lost revenue for those solar homes, and the only way that they can really capture that revenue is by having a battery.
While Warwick Johnston has solar panels and a battery on his home, he's still wary of calling a boom just yet.
But I see that there's a big future both for the solar industry and for home energy storage as well.
Those who've invested are happy.
I think the batteries are the way of the future, really.
Charging ahead with a renewable revolution.
Amelia Turzon there. Analysts at Bloomberg New Energy Finance say Australia has the most decentralised energy grid in the world. Will Edmonds says that means governments and regulators are on the hop trying to fix the problems that pop up.
I guess what we're seeing is a little bit of panic. No one really expected uptake to happen at quite the rate that it's happening at now. So it's really all hands on board trying to make the market more flexible, trying to make price signals more cost reflective, and trying to address this really big boom in rooftop solar that we're currently seeing. The big question is whether a lot of these reforms, a lot of these changes, a lot of these things that are even happening naturally, whether they'll happen quick enough.
Should the government have been on the front foot with this in addressing these issues?
It's not only up to the government. There's also other actors in this market. There's also the Australian Energy Market Operator, there's the distribution networks, and we also have the Australian Energy Regulator, which oversees the networks. Now, they are definitely on the front foot, and they are definitely progressing policies that can really try to integrate rooftop solar into the grid.
What do you think the optimum policies would be in order to smooth out the problems in the network at the moment?
There does need to be a greater participation of consumers in the energy market. There needs to be greater flexibility on the consumer side, whether this is having batteries that are shifting around your energy during the middle of the day or smart appliances that are turning your lights on and off. The difficulty is that most people don't want to be involved in the energy market. Most people just want to pay their bill, myself included. So what we need is policies that encourage a really diverse market of actors who are willing to kind of do this for you.
So what you're saying then is there needs to be different price signals to consumers to perhaps sell at different times.
Exactly. Yes, exactly. And this might also encourage storage uptake. This is kind of the elephant in the room at the moment, which is batteries are expensive, their economics can be precarious at times, yet there is need for flexibility in the grid, and storage can deliver that flexibility. So certainly a lot of these actors are working, how can we introduce more flexibility in the market through batteries and make the economics a bit better but more palatable for consumers.
And do you think this is where also federal and state and territory governments need to come to the party to make those batteries cheaper?
We are seeing that. It's not the only tool that's there though. You can also have increased network spending. You can have things like community batteries that sit in neighborhoods. There are other tools besides just battery subsidies. And we're also seeing over time, as more rooftop solar is introduced to the grid, there's more fluctuations in wholesale power prices. This means that during the day, power will become much, much cheaper, and in the evenings, much more expensive. Now, that will eventually be reflected in people's power bills. And this is just a natural incentive. When people notice that they're actually paying for, the energy they're offsetting during the day is very cheap, yet they're paying a lot in the night when they're not producing solar, that is another incentive to go out there and buy storage.
And so you think battery uptake will then naturally occur over time because of that?
We do think that over time, battery uptake does accelerate. Also, as people buy more electric vehicles, demand for lithium batteries really skyrockets, and people that are producing these batteries become better at what they do. Battery prices come down, and it becomes much more affordable to the consumer.
So rooftop solar and electric vehicles, in a way, are working in concert to encourage battery uptake? Yeah,
so on the price side, more electric vehicle uptake is driving down the price of batteries. And when it comes to economics, rooftop solar producing very cheap energy for these houses definitely assists the economics of storage. One day you could definitely imagine that you have rooftop solar charging your vehicle, charging your battery. Your vehicle can also discharge back to the grid, and the whole arrangement becomes much more, I don't know, how we say, dynamic.
And what are the issues then here for traditional power companies, the electricity providers that currently have a traditional electricity grid and infrastructure?
Already they are reimbursing me for rooftop solar that I export back to the grid, but also we have things like virtual power plants coming to the fore. Now, these are retailers, they have a whole portfolio of decentralized energy assets such as rooftop solar, batteries, electric vehicles, or even demand response people where they can turn power down. Using software and using the internet, they can aggregate all these resources and kind of use them in the same way they would use a gas power station. They can turn them up and down and generate back to the grid. We already have that changing. And when it comes to electric vehicles, retailers are already becoming very interested in this space. AGL and Origin, Australia's two largest retailers, they already offer electric vehicle services to their customers.
Will Edmonds, thank you so much for your time.
Thank you.
A $2 billion government rescue package for Australia's last two oil refiners is also a win for investors. Ampol's Lytton operation in Brisbane and Viva Energy's refinery in Geelong will now stay open until 2027. The support plan cuts the risk of underperformance by smoothing out Ampol's cash flow volatility. The company will get payments when refining margins are low, essentially underwriting Lytton's viability. Both companies have been struggling to compete against mega refineries in Southeast Asia. The government deal saves more than 1,200 jobs for the next 6 years.
It enables Ampol, in parallel with continuing ongoing refining operations, to be developing future uses for the site and protecting critical manufacturing jobs that will play an essential role in the longer-term energy transition.
The rescue package boosted the share price of both Ampol and Viva. They were among the biggest movers in the top 200 stocks on the ASX. Crown's share price lifted slightly after the casino giant rejected a takeover bid by US private equity firm Blackstone, saying it undervalues the company. It's still considering a $12 billion merger proposal from rival Star Entertainment Group. The market managed modest gains. The All Ords added 0.25% and the ASX 200 was up 0.1%. And the Australian dollar is down a little, buying around 77.5 US cents. I spoke with Elizabeth Tian, Director of Equity Derivatives at Citi, after the market closed. Elizabeth Tian, last week we saw inflation concerns spark a huge sell-off, particularly in the tech space, but the markets are back up again today. It seems investors have pretty short memories.
They sure do. So market by the end of last week really rallied right back. And today, looking at our market, some of the miners are doing quite well with iron ore prices a little bit stronger today. Markets really thinking that, with the Feds, central banks around the world really reiterating the story that, liquidity is here to stay. They're really going to look through anything short term and really provide that liquidity to the market. So markets have rallied off the back of that. Obviously, some of the sell-off in the tech sector last week was also fears over the COVID outbreaks in Taiwan, which is very prime to the whole tech sector globally.
And of course, there is still quite a bit of disagreement between the markets and the central banks about whether there is going to be a short-term spike in inflation or whether it is actually going to become entrenched. How do you position yourself in that environment?
That's really the billion-dollar question, and that's probably going to be the question for the next quite foreseeable future, which will lead to a lot of volatility in the market, where we see data points pointing either way. For example, that inflation data, the worst since 1981 core inflation data. We think that it is transitory in the meantime, but we could see some of that inflation really come through structurally. And we're probably a little bit ahead of the street. Our US economist thinks that the Feds might need to start to lift rates as early as later this year. Locally in Australia, we think though that there's a lot of slack still in the labour market. We think full employment, that's going to be reached for quite a while. We're probably needing to see unemployment really come down to about 3%, which means there's much more breathing room for the Reserve Bank to really keep rates on hold.
When it comes to inflation, investors have not seen inflation since well before the global financial crisis. We're going back to around 2007, 2008. How does that play into the investing strategy if we do see inflation come back?
It's going to be a real huge shock to a lot of investors. We just haven't seen it for so long. We really thought after the GFC, everyone was saying with, that the central banks, there's going to be a lot of inflation. That's a key driver for asset prices. Low inflation, low interest rates, very strong for asset prices.
Now, something else that was out today, and an economy that has been perceived to be doing very well, is China, but the data disappointed a little.
It was a little bit weaker than expected, but on the back of that, though, the Chinese share market still bounced. We did, though, see a sell-off in some of the other Asian economies across Asia.
Elizabeth Tian, as always, thank you.
Thanks, Alicia.
And that's all from The Business. For more on those stories, go to our website and click on the business page. You can also watch the show on iView. I'm Alicia Barry. Thanks for your company. Good night.